Welcome back, everyone. This is a brief update on news from the oil market. Crude oil prices were able to stabilize higher in the previous days as traders may have bought into the optimism of a potential phase one deal coming closer on the US-Sino front. On the other hand, weekly crude oil inventory readings confirm supply is coming in strong. On the one hand, the Energy Information Administration showed U.S. crude inventories increased by 7.9 million barrels, while on the other hand, the American Petroleum Institute also showed that crude stockpiles rose by 4.3 million barrels, both for the week ending November 1st. Despite the surpluses, crude oil prices managed to keep most of their increase gained in the previous days, implying that other fundamentals are driving the commodities price direction. In the previous days, comments from Mohamed Barkindo, the Secretary General of the OPEC group, may have had a positive impact on oil prices. Barkindo made remarks concerning next year's market expectations, which he noted look rather favorable for the oil market. According to his sayings, there is a more optimistic view for the future, as some fundamental matters that have been keeping the commodities price and business constrained may be slowly fading away. OPEC's General Secretary may be referring to the smoothing US-Sino trade dispute and some financial indicators from the US, China, and other parts of the world that may be implying that the global economy may be in a better shape as opposed to what many market participants expected. On a separate note, Barkindo also made comments on Brazil, as he seemed excited to add the Latin American nation under OPEC's umbrella, something Brazil has not confirmed yet. However, for OPEC to consider Brazil as a team member, they must certainly have the potential to assist the group and uplift their own status as a recognized oil producer. Comments from Brazilian officials confirmed that the country has the potential of producing 7 million barrels per day. Our opinion is that this statement could have been aimed at attracting other investors closer to them rather than Brazil to OPEC. On a different subject, Saudi Aramco is getting closer to going public, as the state-owned oil giant may even determine its final launch price in the following weeks. Analysts are now making a case for Aramco to surpass Apple as the world's most valuable company if it's able to reach a valuation of $1.5 trillion US. Furthermore, according to other reports, the Saudis may have in mind to effectively diversify the kingdom through this IPO, as some believe that they are willing to open up the kingdom to the world. As a conclusion, our opinion is that oil traders will be influenced by updates over the progress of the US-Sino front. As the two largest economies of the world get closer to a phase one deal, more constraints over the health of the global economy could be resolved, providing more opportunities for countries to bargain and transact oil. Oil budgets may have been reduced for the most part of 2019, and this may change dramatically to the upside if a solution is imminent. For more information and trading ideas, you can visit our webpage, follow us on Twitter, like us on Facebook, or subscribe to our YouTube channel. This is Angelos Zitis from IronFX, wishing you solid trading.